So this is an exciting new way of talking to investors. Why are you doing it?
Well, we like to disrupt and we like to do things differently, and the internet is ultimately about the democratization of information. So I thought this was a great format for us to tell what I think is an amazing AO story and journey to a much wider audience from a global perspective than we have in the past.
And AO is a business that likes to do things differently, and so you might say that this is the AO way of looking at results.
So what's the AO way of doing business? What's the strategy today?
Well, so the AO way of doing things, I guess, is the foundation for the strategy. So the AO way is very much, we talk about it as treat every customer as if they were your gran and make your mum proud in the decisions that you make. And then we assemble an army of people that passionately live our values, and we empower them, and we give them the energy and the informal structures through which they can operate that. And that's the heartbeat in the middle of the business that enables us to deliver the strategy. And the strategy, if you sort of arc back to our IPO in 2014, so crikey, 5 years ago now, which was built on 14 years of a startup learning business. And at that point, we were a single country, single category business. And so our strategy was to take all the learnings of that and to bring that culture and that disruption and that service to customers in more categories from a UK perspective, and then to take more control and ownership of the supply chain and the infrastructure around it through things like logistics and recycling and these businesses that we engaged with, and to take control of those, and then to make the most of the opportunity through the ecosystem that created, and to internationalize all that on the basis that the products that we sell are common, the systems that we operate are common, the way that our logistics model works is common. And so expand that out into Northern Europe, and our landing point for that was Germany, and then to move on from there. And that's very much still the strategy today, and I've never been more excited about the scale of the opportunity that strategy offers for us.
You mentioned the IPO. That's the elephant in the room. The fall in the share price since they were first listed has left many investors in a pretty bad way.
We are still an inherently complex business, and there will be some volatility as we grow organically in the numbers of categories and the number of territories that we operate in. But if we look at the executional risk that we've actually removed from the business since we IPO'd, we were a single category in the UK, and we are now more than 10 categories in our UK business, with operations in Germany and the Netherlands. And so if we look at what we've delivered and the risk we've removed, we've come a long way since that time at IPO.
Yeah, and I think it's fair to say that the strategy that we set out at the IPO wasn't for the faint-hearted. To go from one category, one country with one type of vehicles into what we've operationally built, it was, I guess, looking back with the benefit of hindsight, it was inevitable that everything wasn't going to go perfectly to plan. But broadly, when you look across the piece, as Mark says, a lot of the executional operational risk from that has gone. And one of the things that we did make clear through the IPO process was that AO isn't a business for everybody. And so there's lots of different types of investors out there. And so, we were clear that we weren't going to be a dividend stock. We were clear that we were a long-term investment. And so when I look at that long-term view with ups and downs within it, I'm still really excited with the journey that we've completed and hugely ambitious for the journey ahead. So,
but if you look at where the share price is today, roughly £1, and where it was, roughly £3, it's clear that today the city still lacks confidence in what you're promising.
And one of the things that we can do is to communicate more effectively with the equity markets as to how we are progressing against the strategy that we've talked about, and that's one of the reasons that we're here today, and one of the reasons that we're here to be willing to be challenged.
Yeah, and I think it's fair to say, you know, the market will ultimately value the business, and in different stages of where the business is up to, different people will take different views on different areas of the business. If you look at our UK business in isolation, it is a growth business that's growing into categories, it's growing top line sales, it's growing its operational capability, it's growing its resilience. And while it's doing all that, it's making circa 30 million a year of profit, and it's cash generative. And then in Germany, our business, and in the Netherlands, is at a different stage of development. And so, you know, so the market will balance that, and different people will take a different view on how you value that. Our role is very much to deliver against the strategy that we've set out. And I think that broadly across the piece, we are delivering against that. And from a European perspective, we're very clear that our ambition is still to be profitable in that market in FY21. And what we're working through with that now is now we've built that, you know, we've built some scale in that business, is which bits of that can we dial up and which bits of that can we dial down, what makes sense, what doesn't, and, you know, how do we accelerate that?
John, you had stepped out of the Chief Executive Chair, now you're back in it again. Mark, what's it like having him back?
So from a personal perspective, it's probably quite exhausting, but I think that you know, inevitably with a change of leadership, what that's meant is that there's been a breath of fresh air breathed through the business, and I think that has raised energy levels and some of the entrepreneurial spirit, which is evidently infectious across our group.
Why was the previous guy, why was Steve fired?
Well, Steve wasn't fired. I mean, Steve was instrumental in the decision to make the change, and very much we made that decision together for me to come back. And Steve and I have been on a journey together for 13 years. And the phase of the business that we are now in, you know, really needs that drive and that entrepreneurial spirit to bring the platform that we've built of the business and the different areas of the business and that ecosystem really now need leveraging. And that needs a slightly different style of leadership. So no, I absolutely wasn't fired. For the avoidance of any doubt, we made that decision together, and we're all hugely optimistic about the future.
But the fact
it's great to be back.
But I'm sure it is for you and for everyone else. But the fact that you replaced him shows that you think he failed.
No, not at all. I think the business has just moved into a different phase where operationally the business is extremely sound. We've got fantastic management teams in all the areas of the business. You know, this is not the John Roberts show. You know, we've got 3,000 people, equally as it's not the Mark Higgins show. We've got 3,000 people across our group on 8 different key locations, 30 different locations in total. So this is about how do we bring together brilliant management teams of different areas of the group so that we can compound their benefit. And that's very much about leveraging the value of the ecosystem. So no, not at all. We're all on one page, and the strategy is unchanged. It's a strategy that we built together.
But what are you doing differently this time, and how have you changed as a leader, as John Mark 2.0? How is that different?
Yeah, so what am I doing? As Mark said, I'm bringing energy to what we're doing, and I think breaking down some of the process and bringing some informality. And so everything that I've always done, which is unchanged, starts with what are we doing for the customer? So whatever it is in the business that we're working on, how is that creating value? How is that disrupting? How do we do today what we were going to do next week? How do we do next week what we were going to do next quarter? And how do we make things happen? So one of my questions that I ask a lot around the business is, well, look, how can I help? So how can I help you to do things faster? And
as opposed to telling people what they should be doing.
yeah, so telling people has always been completely disempowering. So that's not actually a change. That is not something that we did in the past. So we have always been about empowering and challenging people. But Mark touched on it earlier that the business is a much more complex group of companies now, and so so for example, Mark and Danny, our COO, and myself, we're on every single key location with every management team every single month. And one of the key things that we're looking for in that is how can we join the dots? How can we see what's going on there and how can we make that add value to over here? And also, what is it that we can bring to the party for you in a particular area of the business that can help you go faster? So, for example, in logistics, that might be that we've got contacts in other businesses that we can help them accelerate the third-party logistics work that they're doing. So there's a whole myriad of different things, all the way down to, I'm not a big fan of PowerPoint presentations. I prefer people just to talk. I'm not a fan of waiting for meetings. I would much rather, so we've got our own little WhatsApp group. Just pick the phone up, talk to me. What is it? Just how do we put the energy and the pace into everything? Yeah, it can be exhausting at times, but that is also, and a lot of the feedback that we've had is, yes, it can be exhausting, but actually it's hugely energizing as well.
And I think that as well as that, what John's helped to bring to the business is to make sure that where we've got a need for a problem to be resolved, that actually we bring the best of what the group can offer to resolve that problem, rather than it being formally sat in, okay, we've got an issue that we need to resolve in recycling or in Germany or in the mobile business, but how do we find the people who can best help accelerate the solution to that problem? And that's the part really about bringing those bits of the business together to generate the best outcomes for the group.
And I think the other element to this as well is on how we develop our people, not just in their own right. So in terms of, you asked the 2.0 question, what have I been doing? Well, actually, I've consistently over a very long period of time been spending a lot of time looking outside the business. And it's not sustainable. There's a misnomer that I have all the ideas that the business develops. It's just absolutely not true at all. But what we want to do is we want to get more people from within the business looking externally and building their own networks and their own ability to challenge thought. And then what we also need to do is we need the top people across all our business to be a hugely informal, high-performing team together that works for the benefit of the whole group. And so one of the things that we did very, very quickly was to appoint a chief people officer. And her role is going to be to challenge that leadership team and to really drive the pace at which people are doing their own personal development. And we can't wait to have her as part of the team and making all those changes happen at pace.
Let's look at the performance of the business. Mark, what are the highlights?
So I think if we look back over the last financial year, our UK business has performed probably slightly better than the market had anticipated, and largely in line with where we thought it would be. So it's continued to grow in double digits, and it's continued to improve its profitability. The group overall, though, posted results towards the bottom end of expectations from profit, and largely in line at the revenue line. And the reason for that is sits within our European business, where the progress that we've been making and expected to continue to make on margin in Germany, particularly in the first half of the year, tailed off into the second half of the year, and that resulted in us being towards the bottom end of expectations from a profit perspective.
We'll talk about Europe in a bit more detail shortly, but to concentrate on the UK, which is still the dominant part of your business, how big a shadow is Brexit?
I want to get away from talking about Brexit. I want to get away from...
I think everybody does.
Yeah, definitely. And so we can't think about Brexit as any kind of excuse per se. Brexit has created an environment that is not as positive as we would want it to be. But we have a growth mindset as a business, and we need to make things happen to continue our business on the trajectory, which is what we have been doing against an uncertain backdrop. I am, though, optimistic, not optimistic in terms of the whole Brexit process, but once it's done, whenever that happens, I think there's a wall of optimism that's coming once we get any kind of certainty. Because the consumer in the UK, I think, is displaying a recessionary type of wait-and-see behaviour. Meanwhile, you know, the pay is rising, employment figures have never been better. You know, the UK economy has proved to be phenomenally resilient. And so if it's that resilient in an environment where the consumer is displaying recessionary behaviour, then I think we can be hugely optimistic that wherever the end of that process is, that we're extremely well positioned for the other side of it. And I think it's fair to say we've had some cost around it, as probably every business has in one shape or another, that frankly you just absorb and plan as best as you can and get on with life, and it doesn't do any good to moan about it.
You had been stockpiling.
We had, and so we built our stock levels up towards the end of March, and that can't just happen overnight. So that has to happen right back into the supply chain and the factories that make the products. And so building our stock up towards a potential hard Brexit date, which didn't materialise, and we've been since then moving that stock through the business. But as we stand here again today, as we come into our peak period of the business, we will again need to start to build stock unless there's evidence of a Brexit deal being in place.
You mentioned the health of consumers at the minute, because of course you're hugely reliant on consumer confidence, on the state of the housing market. To you, they are resilient.
Well, so no, I think, if you look at the market, housing transactions are down, and we sell big ticket electricals, and big ticket electricals track the housing market very accurately. So there has been a definite impact in the overall market, but we are a growth business. We are in a growth sector. The market is fundamentally migrating online. And as we accelerate a better proposition into that for the customer, then I would hope that we would accelerate that migration.
Okay, so your growth comes from changes in consumer behaviour.
Yeah, I think we help to drive that consumer behaviour. And back to your point of earlier, in terms of what we're doing on mindset, is we are putting the customer absolutely back front and centre of how do we get back to driving the proposition. We invented things like same day, we invented next day, we invented 7-day delivery, we invented gas installations at the point of delivery. What are the next things that we can do to leverage our infrastructure for the benefit of consumers? And so I think we can use those things to drive customer behaviour, not necessarily to drive the total market.
And what you've also been doing, Mark, is branching out into associated areas, including mobile phones, a deal which some analysts, some commentators have questioned the suitability of. What was the thinking behind it?
Yeah, so we think that the deal to acquire Mobile Phones Direct was great for our group, and it added to our suite of offering a new category. So we already sold some SIM-free mobiles, but what Mobile Phones Direct did was bring the systems and processes and relationships with the networks that allowed us to, at scale, sell postpaid mobile contracts, and we became overnight the second largest independent provider of mobile contracts in the industry. And so we, to use one of John's phrases, we were willing to pay for pace to get scale in that category quickly. And the systems and the processes to execute that category are different to the ones that we already have. But more than that, as we see the landscape of connected devices changing, that acquisition actually brought with it the network relationships, and we see a future where those connected devices, of which we already sell a great number, and have capability in our logistics operation to connect those devices, bringing the network partners on board actually really future-proofs our business for the future of the electricals industry.
I think it's about applying learnings as well. So as we went from single country, single category, so if I pick Samsung for no other reason than they're in both categories, so in white goods we were a major customer for them, but as we stepped into selling televisions, then that was a different team that we had to deal with within the Samsung infrastructure, and so that didn't happen as quickly as we thought it would. It would be the same with the Bosch business from the UK into Germany. Relationships take time and they're built on experiences that individuals have with each other. And so applying that learning into the mobile phone business, one of the big things that we got in that pace was from day one, we're the only operator that was offering all 4 networks. The time it would have taken us to build that, to build the relationships, we don't want that time. We want to grow at pace. And so as a standalone financial deal, I think it was a fantastic transaction. But actually what it gave us from a pace and a platform perspective has been amazing. And if you think, I think about it from a customer lens, are connected devices going to be more or less important to me over the next 5 to 10 years? I would say that more. Am I going to have more or less devices connected over the next 5 to 10 years? I would suggest more, and therefore am I going to consume more whatever data or voice or whatever the connected medium or Wi-Fi or broadband or whatever it is? So I would suggest that market is a fantastic market for both the products that we sell, the services that we offer stepping over the doorstep in the home. So Mobile Phones Direct actually is a real springboard for us into lots of other things, but at real pace. So it's taking the learnings of the other categories and the territories and the journey that we've been on, and the guys managed to do a fantastic standalone deal as well. So I think it's a stunning deal.
So just to sort of encapsulate that, it helps that it has fatter margins, as I understand it, but that's just the start.
I don't think that anyone would describe margins in mobile as fat. But,
Everything's relative.
But as John said, as a standalone deal, it absolutely made sense for us to do. But the rationale for doing it was not to go out and buy a relatively small business compared to our scale, just because it made some incremental profit. For us, this was all about how it strategically sat within our ecosystem and how it set us up for the future.
And things like frequency of customer. So I was doing an interview recently on how I was being quizzed on the decline of the mobile phone market and the cycle changes going from 1 year to 2 years. That's fantastic for us. We're used to people buying washing machines that get changed every 7 or 8 years. So actually, and this has a monthly billing platform. So there are lots of other great customer reasons for us to do this.
Okay, Europe, the losses remain substantially the same. What's the problem? What are you going to do to fix it?
Okay, so if we take our performance in Europe over the last 12 months, so we've grown our revenue line by over 30%, and now our revenue is in excess of 170 million euros. And so we're pleased with that level of revenue growth. And importantly, it's given us a critical mass and a massive scale to be able to start to look at some of the key drivers of that business and understand how they really interact with the local market. And so, if we look at what's happened and why losses have stayed flat, in the first half we did see positive momentum in our gross margin, but that then tailed off in the second half of the year. And I'll go through some of the key drivers of that business really and what's happened. So we really see 4 key drivers. Firstly is customers, and are we delivering to customers with the quality and the experience that we really want to? So are we treating customers as if they were our gran, and would our mum be proud of what we're doing for them? The second one then is revenue. How much revenue can we acquire and at what cost and at what rate can we grow. Thirdly then, we look at our product margin. And so fundamentally, how much are we paying for the products and at what price are we selling them to customers? And then lastly, our cost to deliver. So delivering large, bulky appliances is a costly experience. How do we do that in an effective manner? And so if we go back to revenue then, we acquire traffic from lots of different methods, whether that's affiliates, whether that's marketplaces, whether that's through Google, whether that's through organic search, whether it's through new digital types of acquiring traffic. How do we look at all of those? What are the relative costs? And which of those do we think are appropriate to dial up? Where do we want to put more investment because we think it's more sustainable for the future? And which of those have got us to this point of scale that we can now experiment with, but actually as we look to the future, they're not necessarily as sustainable, and we maybe want to dial those back a bit. And so we're working on those. We've appointed a new e-commerce director who's working with us, and we'll look forward to updating more in November as to how we're progressing on those relative ways of attracting traffic.
But in the meantime, it continues to lose money. It continues to burn cash.
Yeah, we continue to invest in that business, but as Mark says, that going from, again, if you go back operationally and you look at what we've done, we've gone from a business that was a zero startup to over 170 million of sales in a few years with over 1,000 people or circa 1,000 people in that business. And so that doesn't just happen overnight. That takes time. It takes time to bring them in across every single different discipline. It takes time to grow the scale. And so it is absolutely still our stated ambition that business will be profitable in FY21. And as Mark said, what we are now doing is we are stepping through the key area of the business that we understand, and we know what KPIs that we're looking for. We know what metrics should be achievable, because this is a business that's exactly the same as the business that we've already built in the UK. And then we've got things that we can dial up and things that we can dial down. We don't know yet, and as Mark said, we'll update on what the outcome of the things that we're doing in November at our half-year results. But what we are doing is what I said earlier, which is we're looking at how do we change the pace. How do we lean the group experience into that? We've got lots of experience in the UK, and in truth, maybe one of the things that we've learned on that journey is maybe not to devolve as much responsibility into such a young business as maybe we did. So we're slightly correcting that and leaning more of the experience across. And looking at how we can accelerate that journey to profitability. But as we stand today, it is still our ambition that business will be profitable in FY21.
And you're confident that target will be reached, that it's more than just a stated ambition, it is something you will achieve?
So that's very much our ambition, and things are inherently uncertain. And so, if we look at our KPI on product margin, there are two things there, two sides to that equation. One is the price that we charge customers, and that is within our control. The other one is the price that we buy from our suppliers, and actually, that is very much an art, and we cannot sit here today with absolute certainty and say that we will deliver the numbers that we need to for us to achieve that plan. And so that's why it is clearly an ambition that both John and I have got a lot of conviction that we will achieve, but some of those things are outside our control, so there's no way we can offer a cast iron guarantee. And I think just going back to your earlier point about, but you continue to lose money, and we'll hear from you in November. Clearly, some of the things that we are doing today will have an impact into that P&L before November, and so we are actively involved with discussions with suppliers. We are reviewing our pricing policy, which may have an impact in the short and medium term to revenue, but we are taking actions with the business today to make some of those step change improvements, and we will be able to talk more about how those actions have manifested themselves when we get to November.
You've seen what some analysts say about your European business, that it lacks critical mass. It's just not big enough to be as disruptive as you would like it to be. If that's the case, then you either grow or you get rid of it.
So is it big enough to be as disruptive as we need it to be? It is certainly being extremely disruptive in the market. And so, we've got net promoter scores of over 90, customers are voting for it, the business is growing, and yes, it is gaining its critical mass. And as I said, we did this from a startup, not through an acquisition. We did look at doing acquisitions, and there wasn't a business that was available to us that we would have been happy with. So that just does take a little bit longer from that perspective. And we were clear at the outset that we believed that the profitable position of that business is going to be somewhere 250 to maybe 300 million a sale. So we're on that journey. And as Mark said, we've done this whole journey in the UK. And so we know the metrics that we're looking for, and we continue to lean the experiences of still being a growth business in the UK into that German business. So is it subscale? Yes, but it's on a journey to scale. Is it loss making? Yes, but our ambition is firmly to support that business to a journey of profitability in FY21.
One thing you have changed is TV advertising. You had your Delivering Tomorrow campaign. Has that now been shelved, and what return did you get from it?
Yeah, well, so overall, I haven't been happy with the returns that we've been getting from TV advertising. And I think that there are two different types of TV advertising as I see it. One of them is pure performance TV advertising, which is very normally offer driven, where there's a deal, a call to action and a time. And then the other piece of advertising is around brand build, where you're trying to communicate what your one and only is, whether that's an interest-free credit offer or whether that is a next day delivery offer or whatever it might be. And I think one of the things about the AO way of doing things is the heart and soul that actually sits behind the AO way and the people that deliver it across the proposition. So we have so many different things to talk about, it becomes impossible to just throw you one thing, because we don't want to hang all our investment on that one thing. And so if I distill it all down to my most simplest view on it, is that if I tell you, Declan, that I'm cool, by very definition, I'm not cool.
Because you've had to say it.
Because I've had to say it, exactly. And so that's what we have been trying to say, in essence, on TV advertising. And so what we want to do is, there are deep truths in our business of the way that we look after customers, of the way that we invent for customers, of the proposition that we offer, of the quality of the content and the search that we create on the website. And so we want other people to tell that story, but we want to find ways to help people to tell that story. And there's amazing platforms out there, the whole social environment of social media, where people can celebrate that, whether that is our drivers creating a moment of magic that they didn't necessarily have to do and would be unexpected for a customer, or whether that's somebody in the call centre that's just decided to be exceptional in the moments that matter. And so it isn't just one thing, and it isn't actually around the functional, transactional things of next day delivery. So next day delivery, delivering tomorrow, gets a lot of the headlines. Next day delivery is not new. Loads of people do next day delivery. I think our difference is actually how we do lots of the things that we do, and quite often to do how, to get that, you need to feel it. And so you can feel it either by buying from us, or if someone you trust says something, then that's maybe something that's worth a look for you. So that's where this is not about us cost cutting around marketing. Marketing is a fundamental part of our business, and it's actually the single biggest opportunity, because our spontaneous brand awareness hovers at around 30%. So relative to our competitors, it's one of our single biggest opportunities. So we'll continue to invest, but we're going to lean our investments much more towards storytelling and asking our customers to tell our stories for us.
Yeah, we also think that, one of the reasons that customers continue to come back to us is that they've tried the service once before. And so if we can get customers through to the business through performance marketing, actually is that then the best way of getting them the brand experience by having them buy from us and really experience us. So as John said, we'll try lots of different channels to bring customers to us, and including investing in our shop. So the user experience on the website, we will take that to the next level as well.
And as ever in our business, data should drive our behaviour, and we're able to collect a lot more data through the trials that we're running than we do in TV advertising, frankly.
So are you saying you'll never advertise on TV again?
No, I'm not saying never. I've learned not to say never, but never's a very long time. I'm just saying in this phase of where we are at the minute, I think our investment is much better deployed around storytelling and getting the deep truths of our business known.
And you say this in your statements to investors and to others as well, that you have reset your North Star, that the obsession with customers has to be total.
Yeah, I think we've reset the obsession. So the North Star has always been customers. And, and Gran and Mum have been consistent, haven't they, forever, frankly. And, but obsessing about it is, how can we make it awesome? How can we reinvent? What is it? What other piece of friction can we take out for customers? We're spending our lives getting around the business on how can we do that? How can we challenge that? So that's a completely consistent thing. But the obsession with it, I think, is the tilt.
But your description of how different bits of the business can work together more effectively, Mark, that's an important point going forward from here, because it talks about how you can leverage your competencies and make them more effective.
Yeah, absolutely. It's about making the sum of the parts more than the individual parts, and how we bring things together to really compound the value that we can deliver out of the business. And so, whilst that's we need to be able to recycle for our group's sustainability and to be able to dispose of products in a responsible manner, actually that gives us an opportunity to invest in the technologies and the systems and processes to be able to do that, which we can then leverage into third parties and make that the sum of those parts more than if either of those two things existed in isolation.
And I think that applies to all sorts of areas of the business. We've got a leading logistics business that has an incredible capability, that has spent years honing its ability to do services for customers that I always think about it as the doorstep challenge. That knocking on a door and delivering something and handing it over is what most parcel carriers and distribution companies do. Actually stepping over your threshold and into your home with a big heavy item then is a very different challenge. And so we've created a real core expertise in that. And is the direction of travel for buying things going to physical retail outlets, or is that moving online? And I think it's unquestionably moving online. And so those other retailers in those spaces are looking for solutions and people that are brilliant at those services. So how we lean that experience in for us incrementally is extremely low risk for us, but we can create lots of value, and that allows us to share in that value. Similarly, we've got world-leading quality content to explain products on our website, and we have a multimedia business in our office in Manchester, where we've got 60 or 70 people in there that over about a 7 or 8 year period have learned how to do that brilliantly. So our incremental cost to then offer that service to other businesses is tiny, but only because we've built the infrastructure to do that ourselves. If you look at house builders, for example, so because we've got a logistics business that does installations at the point of delivery, because we've got a vehicle physically pretty much in every postcode every day. And because we've got a retail business with huge scale with the brands, we're actually able to take our retail competencies and offer a service into the national house builders, so the Barratts, the Persimmons, the Redrows of this world, and give them a proposition that's faster, quicker, faster, cheaper, better, with a higher level of service than they've ever had in the past. And so we think we can help them to take cost out of their business while giving them a better service. So this isn't just about disrupting for our gran, if you like. This is about disrupting lots of different areas of the businesses that we touch.
And is that something that is still theoretical? You're still in discussions, or is it actually generating revenues? And if it isn't, when?
So, so in terms of the energy that we're applying to those, what we've done is we've built the core competence to be able to do those things, and we are getting traction, and we will update between now and November where we're up to on that. At the minute, we're not in a position to announce exactly on the different deals that we've done, but on direction of travel. Those are the markets that we are looking to develop. One that we have been quite public about is the rental market. So I think the rent-to-own industry is an industry that's absolutely ripe for disruption, and I think there are a lot of families out there that really need somebody to come and disrupt that. And so because of our ecosystem, we've been able to do that. And so we're working initially with housing associations on how we can take what is often costing about £10 a week and offer that in for £2 a week, make a real difference to those families. And ultimately that comes down to the rate of default within that industry and then the cost of default. Well, because we've got a vehicle in every postcode every day, our cost of collecting that product we think will be relatively small. And within our recycling business, the purest form of recycling is, of course, reuse. So actually our ability to recover some net asset value out of the product that we bring it back puts us in a unique position to, at the front end, put some faith in those people and basically say, look, what we'll do is we'll take all the cost out of the supply chain and we'll give that to you in transformationally lower prices. And what we need you to do is to pay the bill. And so if you pay the bill, actually that whole ecosystem works, and we can then do that profitably. That then allows us to scale that. It's taken us a couple of years to get to that stage, and we're hugely encouraged by the opportunity that it presents. And I was doing a day of filming for the One Show on it and going round to meet some of the customers. And I've got to be honest, it was quite a touching day to see the practical reality of the difference that business section is going to make to those people. So it was certainly a day that in the car on the way home, I was reflecting that we're definitely making mums proud with that bit.
And we're excited about the rental model, both from the enormous impact that it can have to our customers, as John's talked about, but actually, that is quite a large market for us that we don't address particularly well today. And so there's a good commercial opportunity there as well as the social opportunity. And so, we talked about the trials that we've got underway at the moment are very important to us because it has to work for both of those two things, right? It has to have that social impact, but it has to work from a commercial point of view. And so the trials that we've got running now, we're excited to see the data and how they perform over a period of time, so that we can really maximise this opportunity.
Actually, the potential for this goes much broader than the traditional market in an era when younger people are more likely to rent than they are to own, when we're moving towards a circular economy. It's now becoming the part of the agenda.
Yeah, I mean, we joke about it internally that kids these days, they walk around like they rent the place. So, I think that if you can bring outstanding value to it, then I think it's got huge sustainability and it rolls into all sorts of different products. And as you say, the more subscription style of model, I would be hopeful that we can roll this out, but it's got to be built on the data. And so it inevitably takes us a bit of time to gather that data. And so we're learning in different cohorts, and we're excited to see what that data tells us, and then we can tweak the model. I don't think anybody's in a better position to be able to do this and to offer this because of the ownership of the whole supply chain than we are.
You talked about the potential from the Internet of Things, from connected machines, from machines and mobiles talking to each other. Just looking forward towards that, towards the use of big data, towards artificial intelligence, what are the opportunities that you see opening up?
Yeah, so if you take the first piece of Internet of Things, I think there's a lot of stuff talked about with Internet of Things. I think we look at it more as a direction of travel, and how are we investing structurally, aren't we, around our services of being in the home and being a trusted partner of the consumer to step over their threshold and do things. As more products, whether it's CCTV, whether it's devices that you speak to, whether it's controlling your heating, more are moving to be more connected, and more are moving to be wireless, and therefore easier, not necessarily easy, but easier to install. I think the connected home will become more connected, but I do still think it's very much in the early stages of it. But I think it's gathering pace, and if you go back 5 years ago, the scale of the amount of people that would have been talking to something on a table, most people wouldn't have been able to imagine it.
And I think we're in a good place to stitch all those things together. So whether that's the physical skill to be able to physically put these things together, whether that's the supply of the products, whether that's the supply of the data from different providers, and giving customers the ultimate choice that they don't have to go and say, okay, I'm going to buy everything from one particular place, from one manufacturer, but actually I can buy airtime, I can bring that together with these products, and someone's going to help me to put that together. And we do think that we're in a good place to be able to help give the customer that one-stop solution to all of those needs.
And I think your topics then on machine learning and artificial intelligence, again, I think there's a huge amount of stuff being talked about in those areas. When we look at the actual practical application, so how do we help solve problems for a customer? I think there's a bit of a gap. And so one of the things that we are doing is we're investing, we're using our AO Innovation Lab, and we're using our own brain power and experiences to say, what problems can we solve? Customers might not realize their problems or friction points. And so one of those would be around something like personalization, for example. So how much data can we bring together and process in a live environment to help you better through the journey? The advice that we give a customer on that should be independent and should be specific to them and maybe tailored to their usage. So we might be able to bring some data in that, because they've shopped with us before, we know their demographics, or we know they've got kids, or whatever it might be. How do we advise people to get the right product for them? Because actually, in the first instance, the first thing anybody searches for is information, and it's information normally on a product. Price actually comes after, once you've got the right product for you. And if your search tends to be price-led, you can quite often end up with the wrong products. And if you end up with the wrong product, that's an expensive mistake in our space. So I think there's loads of things we can do. But at the minute that we're in conceptual mode and we're testing theses on a very much a test and learn basis, and we're a bit back to, we have the internal joke, don't we, that if we can think it, then it's possible from an IT perspective, because IT is a very logical step of actions. And so let's start taking those steps and see what we can do. And then let's be brave enough to put it in front of customers. So that you can run all the focus groups you want in the world, but there's no substitute for trialing things with customers. So we want to do that, and if we get a few things wrong on that, we'll just be honest with customers, because I think they'll trust us to trial things in the right way. So I think it's a really exciting area, and particularly with the amount of data that our business collects, what we've got to do is we've got to build a bridge from the processing capability across to the data and then out to how we make that useful to the customer. What a really exciting area of possibility.
Let's look at the business through the lens of the analysts who are watching this. UK revenue and your penetration of the online market continue to be broadly flat. Why should we expect a step change in the status quo?
So if we look at our overall group, we've continued to grow our revenues quite significantly. But I think your question is probably targeted at our UK business and probably specifically the MDA element as the major domestic appliance element of our UK business. And you're right that has been flat over the last 12 months or so, and we aren't satisfied with that outcome. We've seen some challenges from the market, which we don't want to dwell on. We're very much about taking share in this marketplace, and we are trialling a number of initiatives to continue to drive that market forwards, and are not satisfied to rest on our laurels with it being flat.
Yeah, I think it's fair to say, you know, the business has done well through some tough headwinds, but we are a growth business and we should be taking share. So I think it is also fair that we have not moved the proposition on in a meaningful way, in the way that we have in the 5 or 7 years prior, in terms of giving more reasons for shoppers to migrate online. And I think in terms of our obsession that we talked about earlier, we need to get back to obsessing about customers and friction points and how can we be exceptional in the moments that matter for customers. And that will drive more migration to online, and we are the market leader in the online space, and that will continue to drive growth. So for absolute clarity, we are not happy with the MDA performance, and we're setting about doing something about that, and we'll be doing a number of different things that we will, all being well, be able to update again in November on how things have been progressing.
How much of the current status quo is an AO issue? How much of it is an issue with the market generally?
So it is, it's very fair to say that the electricals markets in most of our categories in the UK, and specifically talking about the UK here, are down on a year-on-year volume basis. But that for us is not the issue at hand, and very much we are focused on growing our business and growing our share of all of those categories. And so our ambition for moving the business forward is to continue to do that. And so, you know, as we look back to last year, as John's talked about, we haven't done enough things to improve the proposition and to drive customers to want to buy from us.
Yeah, and I think one of the ways that we're going to be doing that is that we're taking some complexity out of the way that we do IT and the way that the business operates around IT, and refocusing more of that towards customer proposition and refocusing that more towards innovation, and then looking at a more on a one group basis. So what we might do in the UK, we will roll that as it is into the European business. And so actually we think we'll get more bang for buck in the European business, and we think we'll get through more things from a UK perspective as well.
But these numbers are already at the lower end of already rebased expectations. How do you end that cycle of downgrading?
And I think, you know, so we achieved a number within the range of analyst expectations in the previous financial year. And I think that it shouldn't be misunderstood that we're not a business that's setting out to grow by inflation by 2 or 3% a year. We're a business that has a very clear ambition to grow into significant double-digit growth, and doing that organically in new territories, and inevitably some of that is a little unpredictable. And so when we look at a range of expectations for how we are going to perform in the next financial year, if our group revenues are materially £1 billion, a 1% move in margins, and we operate in very, very competitive markets, so let's not pretend that our margins can't move by in excess of 1% on a daily basis. A 1% move would give us a £10 million movement in our profits for the year. And so there will be some lumps and bumps, some ups and downs as we go forwards. And honing in on an exact number, for me, doesn't change the long-term outcome of where the business is going to get to.
And I think within the ecosystem point, we're trying to build more sustainability out of those businesses or more predictability out of their profit streams, and we're trying to build more profit out of the competencies that we've created, rather than them just being costs in the business. However efficiently or well run those costs are, if we can take that competence into being a profit, then that gives us more resilience from more areas of the business, so that if there is a headwind over here, then there might be more of a balance over here across the ecosystem. And so that's another reason for us to really be putting a lot more pace into how we leverage the economics of that ecosystem.
You've been talking about new developments in the business, but the core of your business is still MDA, fridge, freezers, washing machines, whatever. How do you fix the core problem there? Shouldn't you be concentrating on that rather than making the business more complex?
So we think that the two things sit together. And so actually, if it's developing our multimedia business, that actually benefits, and one of the core reasons for doing it is to benefit the core retail business and to help to grow that by leveraging our delivery capability across third-party clients, increases the scale that we're able to offer great installation services, again, to our retail clients. And so the two things are very much two sides of the same coin. And we've also talked about some of the initiatives that we are doing solely in our retail business to reignite that level of growth.
Let's talk about margins. Your relationships with your suppliers appear to be getting worse. What's happening?
So I think we need to separate that into two parts, the UK and Europe. And let's take the UK first. I think our relationships with suppliers have never been better. We are happy with the progress that we are making in margins in our newer categories. And our MDA margin continues to be good in the UK. But what we do see at a gross margin level, and I think this is the question that you're asking, is a dilution as we enter into and our new categories become a bigger part of the scale of the business. And as we go forward, we mustn't get too hung up with some of the individual measurements of margin down the P&L. We still anticipate that we will continue to grow our EBITDA margin. And that might be that gross margin comes down with different price points, different levels of delivery flexibility and capability. But our EBITDA margin, we certainly have an ambition for that to grow over time from where it is today and from where it was in the past.
Yeah, and I just picking up on that point before you do Europe, and I think it's worth saying that these margin progressions in new categories are a journey as well. So when you start selling TVs on day one, with a business doing £1 million, you would expect your margin progression to have advanced by the time you're a £100 million business in TVs. So they take some time. And one of the things that we've done over the last few years is go into a lot of categories very quickly that have completely different dynamics and relationships that, again, we've needed to learn. And so those different categories are maturing as well at different rates. So the cost of delivering an American side-by-side fridge freezer is very different to the cost of delivering Microsoft Office that is downloaded. So there's quite a range of the dynamics of the P&L, but Mark's quite right, is that our direction of travel on an EBITDA basis should always be improving.
But are you expecting to return to the margins that you would have seen, say, 5 years ago? This isn't a permanent rebase.
So if we look at our UK segment, we've continually been improving our EBITDA margin. It is, before I go on to Europe, it's probably just worth mentioning that over the last couple of years, we have seen our other administration costs creeping up. And we should be clear that actually, one of the key deliverables in getting to an improving EBITDA margin is to show leverage through that cost. And this is where we've invested ahead of the curve in some of the newer categories, in some of our newer capabilities, and we expect to deliver improved margins over time that will leverage through that other admin cost. And as we move on to Germany and to Europe more generally, whilst we'd seen some progression in margins in the first half of last year, we did see that tail off slightly in the second half. And they aren't where we need them to be. There's an element of self-help that we can do, and an element of things that are in our control in terms of our pricing policy and how we market our headline pricing, and so on. But the second part is that we do need to negotiate with our supplier partners. But it's very different now that we've got a business turning over 170 million euros than it was to negotiate when we had an idea of a business that might turn over 170 million euros. And so we need to do that, and we are going through that at the moment, and we are very hopeful that we'll show an improvement on that in the coming year.
But given these problems in Germany, how can we believe your prediction that you will be profitable in Europe by 2021? Isn't it time for you to be more realistic with the market?
Well, I think we have been consistently realistic, and we've set out a plan, and that plan evolves as well. That our ambition is to be profitable in FY21. And as I talked about earlier, we're actually working through the latest iteration of that plan across all the key areas. Now we've got the scale of business that we've got over there to see if we can accelerate that. But there are big elements of that plan that are uncertain, and I think we've been quite clear about that around things. The key uncertainty in there would be the margin that you can achieve from the brands, and that's a journey that we've lived through in the UK. So, if I go back, God knows how many years now, 12 or 13 years ago in the UK, it took us 7 years to convince Miele to give us a direct account. And that was all about explaining to them through a journey how we create value for their customers and changing their perceptions. History then repeated itself as we then went into TVs, and we had to convince all the brands in that space that we can repeat the trick there. And the European market is a few years behind the development and the progression of the UK. And so we need to lean more effort into, than we have been doing, into the explanations of how we create value for the brands and how we, with our multimedia that Mark touched on earlier, can explain their products to their customers much better than I believe you can actually do in store. And then from our perspective, we're leveraging our own assets of what we've created as well. So it very much plays to the model, but is that going to take 6 months, 12 months, 18 months, 2 years? It is more uncertain, but that's one element of the jigsaw. There's then others that are much more scientific. So from a logistics perspective, we know at certain levels of volume, because we own our own logistics business, obviously in the UK, and we run our own software to run that business, we know what the output will be broadly as a cost to deliver from the different volumes flowing through. And when we look at putting traffic in the top of that funnel, I think that's an area in our European business where we just haven't had enough experience. And so we've invested to recruit more experience in there. And also what we are doing is we are leaning more of the UK experience in, and we're accelerating the rollout of the technology that we've built in the UK around things like the Facebook platforms and around Google and our attribution models. That I think it's a mistake that we made, where we gave too much autonomy too early to a business that was too young, when in reality we've spent a huge amount of time over here learning these disciplines for platforms that are the same. So that's a fundamental difference that we're going to be making going forward within the plan. The output of what all those different things are going to be, we'll be able to update much better on in November. But certainly, from my point of view, the macro picture of where we're at in Germany, I still absolutely fundamentally believe in. My ambition is still firmly for that business to be profitable in FY21, and with the pace and the passion that we've got in the plan that we're revisiting, we're looking at how we can accelerate that. And so we are being, I think, very transparent about that, and also transparent about the fact there are certain unknowns within there. I think that's fair.
What proportion of performance is attributable to warranties? There's a concern that you might be becoming over-reliant on warranties.
Yeah, so our warranty business has remained very consistent with previous years, and we obviously disclose the level of revenue that we make from selling associated products, and you can see that level of revenue remains pretty consistent year on year. But we have actually during the year changed the product that we sell, and so we actually now offer a better product to customers, and we've migrated the existing book as well onto an insurance-backed product that is sold in a regulated way. So from a customer point of view, there's lots of protections in that contract for them, and we're very, very proud of, coming back to the Would You Mum Be Proud, we're very proud of the product that we offer to those customers who a warranty is a useful thing for them to buy. But the overall dynamics of it haven't changed a great deal during the period.
You've consumed 25 million in cash over the last year. How concerned are you about the liquidity headroom, and how can you commit to CapEx in the year ahead?
Yeah, so we've consumed 25 million of cash, and at the year end, we've got about 85 million pounds worth of liquidity headroom. So even at that burn rate, a consistent, a significant time into the future. But I think what we've spoken about today is that we do not anticipate that our European business will be consuming the level of cash that it is today in, even in 12 months, but certainly in 18, 24 months' time. That level of cash consumption will be materially different from our European business.
And I think I would add in that one of the big changes that we're making, as we touched on earlier, is the mindset around the pace and the growth of the business. And as we drive the value out of the ecosystem, these are not things that require huge capex, are they? These are things that we are focusing on that firmly leverage infrastructure and capability that we've already built. So again, we've done a lot of the hard yards in that space, and we would expect that to be on an improving trend.
You've both given reasons why you think investors should remain confident about the business and the future. From all the things that we've discussed today, what are the most important?
So I think from my perspective, it's the team of people who are going to deliver the great customer service, and so that's not me and John. That's the people out here and the managers we have in all of our divisions. But fundamentally, it's their passion and spirit and care and the experience that they deliver to our customers. And that great customer experience for me is why we will be successful as a business.
Yeah, and I think how they all perform in unison to one goal, and that one goal is about the vision of the core fundamentals that I believe that in whatever the time period is, 5, 7, 10 years time, that across the majority of the categories that we sell, over 50% of the market will be transacted online. I think we've done a lot of the hard yards, and we'll have more ahead without any doubt, but we've done a lot of the hard yards of building the scale of infrastructure to provide an outstanding customer service and proposition and offer across every element of the business for where the customer is going to shop rather than where the customer has been shopping. So I think we've been bold in the way that we've invested in that. I think it's positioned us extremely well for what is a huge total addressable market, and we're the only pure play retailer in this space across the markets that we operate in. So at a macro level, does what we do make our gran happy and our mum proud? I think it absolutely does, and I think the numbers will begin to flow from that, as they are already doing and evidencing in our UK business, and that will flow through our European business.
Gentlemen, thank you very much.
Thank
Thank
you.
you.